So this is the final trading day in October. Welcome everyone to the Business Week, taking you into November. The countdown to the final 60 days of 2016 starts in another 24 hours from now. I am Bosin Amafai on the show today from Channel's global headquarters in Lagos, Nigeria's largest economy and the financial capital. Let's spend the next 1 hour together, starting with some news in the headlines. This is Made in Nigeria. The Senate President, Dr. Bukola Saraki, has praised the Nigerian Army on their decision to purchase 50,000 pairs of military shoes or footwears from the manufacturers in Aba, Southeast Nigeria. The Senate President also lauded the decision of the Nigerian Air Force for their cooperation with Innocent Motors, an indigenous automaker, to source some of the spares that the Air Force will use in its aircrafts. That's one good news this morning. Let's start the week on that as the Nigerian Army decides to patronize local shoemakers or military hardware makers, footwear to be precise, in Aba, and of course the Air Force looking to work with Innocent Motors to get some aircraft spares from that indigenous automaker. That's Bosin Made in Nigeria. That comes just about a few weeks after the Nigeria Economic Summit Group focused on made in Nigerian goods. Meantime, this was the data from the weekend from the Statistics Office reporting about 9.1% decline in human and cargo traffic in Nigeria in the second quarter of 2016. Total passengers was marginally down to about 3.5 million. Meantime, the controversy surrounding the decision by the executive or the Buhari's administration to borrow a fresh $30 billion from overseas is pitching the executive branch against the legislature. The senators and the House of Reps are asking for more clarity on what the $30 billion will be used for. The executive says the fresh jumbo loan will be for infrastructure projects, balancing the budgets as well as payments, which will include salaries and wages. That's some of the stories in the news this morning. You want the bigger news picture, you know where to find that. Stick around till 11 o'clock for our news track from our newsroom here on Channels where news comes first. For now, let's get on with the financial markets. Look at the brutal final week in the month of October. The week slammed by earnings from the stock market. Last week, Tier 2 banks disappoint. Consumer good companies were whittled. Oil and gas stocks burn, and industrial goods barely post good earnings. Early today, Guinness Nigeria reporting some of the worst numbers for the period. What numbers do we have from Guinness? Overnight, Guinness Nigeria reporting its first quarter ended September the 30th. Revenue slightly higher at 23.0 billion, but cost of sales, that is the cost of pushing the products that Guinness produces, increased by 4 billion naira between the first quarter of 2015 to the end of September, over a 12-year period. You call it a year-on-year figure. Look at the loss after tax. As at the end of September 2015, Guinness made a profit 517.56 million naira. By the end of September, just 30 days ago, Guinness reported 2.21 billion naira loss. And that is quite a record over a year period. Loss after tax, 2.22 billion against 362.29 million naira reported in the same period last year. Things are getting really nasty. If you saw the earnings from Nigerian breweries last week, you saw what happened to the earnings per share. It went south. That's the largest brewing company in Nigeria. And that tells you the state of where things are. We'll get to that with Robert Today of Afrinvest in a few minutes. But first, let's review some of the markets numbers for you. Last week, let's start from the FMDQ, OTC Securities Exchange, where we're getting the bond market. Broadly, the bond market was positive last week, broadly down about 20% on average across all yields in the market space we watch. But this is a summary of what it looks like with the data from FMDQ OTC markets. Look at the FVN bonds, FMDQ bonds that you find. That's the total, 104 deals, 47.20 billion naira. That was quite a bit of soft landing. But in terms of where some of the big ones finished off on Friday, the 14th March 2024 paper is the one at 34.80 billion naira, 20 deals. But you have more deals in the June 2019 at 103 naira to 7.20 billion. And you find the 2036, one of the long-dated bond, at 81 naira 39, 2.2 billion in 19 deals. Look at the treasury bills market, and that's where a lot of activities are piled in. On Friday, 212.24 billion naira. A lot of treasury activities. Again, we got inflows of liquidity into the market in the first 3 days of last week as the central bank repaid some of the monies the banks paid for at the FX window. Once that came back into the markets, after central banks sold $313 million, the market took that in, and treasury bills went really active at the second window. You see that number there. But look at the treasury bills maturing in the next 30, 60, 90 days, down till about April 2017, 13th of April. So that looks about 6 months from now. And look at the figures in there, maturing on the 17th of November. We're stepping into that tomorrow. In about 3 weeks from now, you find 45 billion, 177 deals. So you find the rest there. Bit of a summary, a snapshot of what the treasury market was in the week we finished. But let's look at the stock market. This was really, really nasty. The stock market went down 1.10%. Those earnings disappointed investors, got investors really, really into some nasty mood, not with Fidelity Bank, Diamond Bank, Seplat Petroleum. So the composite index, what you call the all share, fell far below the 28,000, sinking 27 to 27,294. And the market cap last week, the stock market shaved off 103 billion naira. That's what the market lost last week. That's a record in one single week. Investors just moved to treasuries and bonds and, of course, currencies. But look at the volume for the market week we just finished. Less than a billion, 678.7 million. You see the naira value, and the total deals slightly below 12,000. But look at the sectoral indices, how the things finished off. I told you earlier, oil and gas burned index 9.12%. Banking gained for year to date 0.38, but down about 0.44% in the week. Industrials managed 2.7. Consumer goods 0.29%. And you find the year to date. If you look at the industrial goods, look at 20.22% since the year started. Not bringing in, well, a bit of soft landing. Bittersweet story from Dangote Cement last week, the most capitalized company on our markets. That's the equities there for you very quickly. So what else do we have to show? Let's talk about the state of the market. Robert today is the head of research at Afrinvest, one of the investment and securities trading firm here in Lagos. Robert, good morning. Thanks for coming through on the show.
Morning, bossy.
Yeah, I'm sure you folks have received Guinness first quarter numbers as we open shop for business today. That's quite disappointing. 2.2 billion naira first quarter loss. That's really a nasty way to end October and not a very nice way to start a new trading week. Talk to us, Robert.
Right. Thanks, bossy, for having me once again. The result of Guinness is in line with the general performance, which you've noticed across the consumer goods, industrial goods, and of course the banks in this period of earnings season. We've noticed that for Guinness particularly, while they were able to sustain a good top-line performance amidst the general lull in economic activities, you saw that their top line was up by up to 6%. And even at the operating level, they were still able to remain profitable. I think they made about 600 million naira at operating level. But by the time you factor in the impact of finance cost on the profitability at the operating level, we discovered that they posted a loss, which is also similar to what they reported in the previous quarter. So it's generally reflective of the performance of the economy, which has impacted on the cost of raw materials. Because if you analyze their numbers at the top line level, when you look at their cost inputs, remember that a percentage of a similar proportion of their raw materials are being imported into the country. So the impact of FX challenges has also impacted on their profitability.
Robert, how much of this very bittersweet earnings on one side from tier 2 banks to the consumer goods and industrial goods are hammering investor sentiments? What's the discussion? When you receive phone calls from investors at AfriInvest, what are they saying at the moment? What are their worries about? What are their concerns? Whether things will turn around? Are they hopeful? What sectors are they looking at?
Well, investors are not so optimistic about the markets, and it's natural, and that's reflective of the performance at the market. If you look at the volume and value of transaction, market has been so much pressured. This last week on week, market was down by 1%, even though at the last 3 trading days of the week, we saw some positive gyration in the market. But generally speaking, the results that have been coming in have not been so impressive. Perhaps it's only the tier 1 banks that were able to weather the storm, because some of them were able to record some top line, some FX gains, which impacted on their profitability at the end of the day. But the tier 2 banks were not so lucky. The industrial goods stocks were also pressured. We saw that Dangote Cement released its results, and of course, profitability was also down. If you look at their profit after tax, was down year on year, no thanks to the costs recorded both at the operating level and at the direct cost level. So generally speaking, investors are very cautious at the moment, and they don't want to rush into taking any position in the market. And the silver lining is then when we get a grip on the foreign exchange markets. The FX rates in the market has been very, very pressuring on a lot of market activity, and it's affecting the manufacturers as well.
Robert, one last question for you, and I'll keep coming to it this anytime I have the opportunity to chat with you folks. What exactly do investors in the market want as far as the currency parity, naira dollar is concerned? Are they looking for a higher figure in terms of whether we should go to, I don't want to say, but maybe 1,000 naira? Would that make them comfortable? Or they're looking for 100 naira parity with the dollar? So when we say they're concerned about the FX numbers, what do they really want to see?
Investors are particularly interested in a market-driven FX market. The way we have it now is not suggestive of that fact, and that is evident in the disparity of the misalignment you see at the interbank as compared to what you get at the parallel market. We still have a wide spread of up to 150 naira to $1. So until we see some form of convergence, which may not come until some of the restrictions that we have in the market, or some unspoken supposed manipulation of the market is taken away, and we have some form of real flexibility as the CBN has rolled out its plan, then we may not, investors may not be excited about the market.
Okay, well, thank you very much, Robert Today, for coming in today on the program from Afrinvest, Head of Research. We'll be back after the break. Stick around, everyone. We've got a pool of our question of the week for last week. That will come right after.